What's up, guys? It's Inha here, Forex trader and founder of Desire to Trade. And welcome to part 2 of the Guide to Trading Strategies.
You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Cret.
Now, in the first episode, we covered a lot of things, and I hope you got something out of it. I hope you could get something to apply and get something that you could use a little bit. We talked about the myth of trading strategies, why you cannot only use price action, and why a lot of traders are failing at that. And we introduced the market phase a little bit. Now, in the second episode, what I want to cover is what type of strategy you can use when the market is going sideways. This is where I do most of my trading. Whenever we have a range, I'm looking to trade. Whenever we have a breakout, I'm looking to trade once again. But you need to remember one thing though. Everything I'm saying in this podcast, you need to test it yourself. You cannot just apply it because you have no idea what is going to work for you and whether you're going to set the right rules to trade it. So I want to make this really clear. Now I'll share a little bit what indicators you can use and how to build confluence for your sideways trade. So the first possibility you have when the market is sideways is to trade reversals. That means you're going to sell at the top of a range and buy at the bottom of the range. That's a simple definition. Now, the way you're going to build confluence is going to depend on a lot of factors, and people will have different ways of doing it. From there, I have a 2-step process that I look at personally, and I want to share it with you. The first step in my process constitutes looking at price action. I'll look at how price is behaving, what kind of movement we had in the past, how strong were the candlesticks, and then I'll look at if we have any candlestick patterns. So what do we see in the price? Do we have any long wicks? Do we have any strong bodies? And all that stuff is going to help me determine what price is doing. Now the second step in my process is to look at indicators. So I'll take out some of the indicators I use, and I try to take this really simple. I don't complicate things. That's unnecessary. But I'm a personally big fan of the Bollinger Band. So I'll put the Bollinger Band on my chart, and the Bollinger Band is giving you sort of a range of price that is normal. If price breaks out of the Bollinger Band, it means price is at an extreme, and it's likely to bounce back. There's different ways you can use it. Some people use it in trend, but that's completely another topic, so we won't get there. But when I see that I have strong evidence in price action with the Bollinger Band combined, and that we're at the low of a range, it gives me a clear sign that price is really likely to bounce back to the top of the range. Now don't forget here that I don't look only at candlestick patterns. I'm going to look at how the price is behaving. That's much more important than what you see on one candlestick. Other people are going to use different indicators, and that's totally fine. There's indicators I'm not familiar with or that I don't use, and other people are a fan of using them. That's fine. But you have to develop something that fits for you. Some people in sideways market are going to use the RSI to see where the price is overbought or oversold. But you need to remember here that the RSI is not going to work when you're in a trend. If price is trending upward, for example, the RSI is always going to be overbought. If price is trending downward, the RSI is going to be really frequently oversold. So you need to be really careful of not using it at the wrong place. But in a range, it's a good indication when you have an overbought or oversold signal. The point here is that you want to have the RSI coming back within the range, the normal range, from 30 to 70 before entering a trade. Some other people are going to use the stochastic, and that works similar to the RSI. What you want to be careful here is not to combine too many indicators at the same time, because it's really easy to cluster your chart and to make this complicated, but you want to have it simple. And usually for myself, one indicator is way enough. So you combine the market phase with your indicator with price action, and that in my opinion makes it pretty good. but you need to see if it works for you as well. The other way I can trade in a sideways market would be to wait for the breakout or the breakdown. In a breakout or breakdown, I'm usually going to consider the prior trend to see if I really want to buy or sell on that breakout or breakdown. Because the trend, if it was strong before, is usually going to help me determine which way the price is going to go. I'll look at candlestick pattern as well. And I might use one indicator to determine how likely is this breakout to work. The indicator I use is the RSI simply, and most people don't use it that way. But when the RSI is overbought, it's also a sign that the bar is in control. If the RSI is oversold, it's a sign that the seller is in control. So if you're at the top of a range and you have the RSI overbought or oversold, it might be a good sign that the breakout might happen strongly. Some people will look at moving average before considering a breakout, see how price is bouncing off the moving average. And there's plenty of ways you can trade those, but I just wanted to share the way I do it so you can get it and possibly apply it. So guys, I thought I would keep it short for this episode, but I'm sharing everything I'm doing. So don't forget the first thing I said, the process when you want to trade. It's important for you to define your process and to know what you'll look at and in which part. So my process, I told you, I'm looking at the market phase, price action, the indicator. And I'll add a few things when you come back to the next part of this guide. Because there's a few things you can look at as well, including the news, to make sure you don't get stopped out way too easily. So we'll be covering that in a future episode. But that's pretty much it for this one. I want to thank you for listening to it. I'm recording this pretty much on the go. But if you have any question, check out the Facebook group at desireToTrade.com/group, desireToTrade.com/group, or check out the show notes of this episode, desireToTrade.com/64, and you'll see everything there. And on that note, I'll see you in the next episode of the Desire to Trade podcast. Ciao.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desirettotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.